Welcome to The Explainer. Take a second and picture where your food comes from. If you're like most people, you're probably imagining vast open fields, maybe a tractor or some seasonal harvests. But honestly, the reality of how food actually reaches your table today looks a whole lot more like a high-stakes corporate trading floor. Modern global food security isn't just about basic farming anymore. It's evolved into this incredibly complex, deeply integrated web of massive international supply chains. We're talking aggressive capital shifts, cutting-edge tech, and global investments that literally move markets. So today, we're unpacking exactly how this hidden infrastructure works. We'll start with agriculture, and then see how those exact same mechanics are rewiring the entire global economy right now. Here's what we're looking at today. 1. A new agricultural partnership. 2. Beyond raw commodity trade. 3. The value-added supply chain. 4. Global capital and policy shifts. And finally, number 5, the future of global trade. Let's get right into it.
Section 1. A new agricultural partnership. South Africa and Italy join forces.
So on June 10, 2026, a major announcement totally shifted the landscape of international trade. Stakeholders from both South Africa and Italy officially disclosed a move to drastically deepen their agricultural trade and investment cooperation. Okay, let's dive into this. What truly drives modern global food security? Well, if you want a resilient food system today, it relies heavily on massive, strategic, cross-border investments. Think of it like a giant economic puzzle. You've got one country with the expansive land and raw agricultural materials, and another country that brings advanced manufacturing tech and established global distribution networks to the table. By combining forces, they figure out how their complementary strengths can build something vastly bigger than just basic primary agriculture. The whole goal here is to create systems that can actually scale profitably in these volatile global markets. To really understand the stakes we're dealing with here, just consider this number. $3.7 billion. During just the first quarter of 2026, South African agricultural exports hit that massive figure. That marks a seriously impressive 11% year-on-year growth, driven by producers expanding heavily into both existing client bases and entirely new international markets. But pushing that kind of volume, that requires world-class infrastructure. The financial stakes involved in getting this supply chain right are absolutely enormous, which is exactly why international partnerships like this are becoming a strict necessity now, rather than just a nice-to-have option.
Section 2. Beyond raw commodity trade. The paradigm shift.
South Africa is attempting to make a massive economic leap here, and they're leveraging Italian expertise to make it happen. And this brilliantly illustrates the core strategy. It's a critical pivot from the old model of raw commodity trade over to higher value processing and manufacturing. The old way is basically just growing a crop and shipping it out in its most basic form. The new way, it's the difference between selling a simple crate of raw oranges for a few bucks versus processing those exact same oranges into high-margin, shelf-stable, packaged juices and premium extracts. Food processing remains one of the single greatest opportunities in South Africa's agricultural economy. By cooperating with Italian firms, South Africa can rapidly accelerate their technology transfer, expand their processing capacity, and utilize cutting-edge packaging innovation that drastically increases their export competitiveness on the world stage.
Moving to Section 3, the value-added supply chain, zooming into the Western Cape.
Now, let's narrow our focus to the specific region that's acting as the real testing ground for this incredible international partnership. The Western Cape has been identified as the key hub for this expanded cooperation. We're looking at specific focus areas like wine production, citrus exports, fisheries, food processing, and packaging technologies. Now, you might be wondering, why Italy? Well, Italy actually remains one of Europe's absolute leading food manufacturing and agro-processing economies. They've got highly specialized precision machinery that can do incredible things, like drastically extending the shelf life of organic products without dumping heavy preservatives into them. For South African producers, this partnership offers direct access to that top-tier technical expertise, acting as a highly lucrative gateway into broader European markets. And on the flip side, Italian businesses gain a highly strategic foothold in one of Africa's most advanced agricultural sectors. It's a win-win. Let's move to and see how this builds a completely integrated modern food system. Step 1 is production, right? Actually growing the goods. But it definitely doesn't stop there. Step 2 is processing, which adds that crucial financial value to the raw goods. Step 3 integrates advanced technology and cold chain logistics. Now, cold chain logistics essentially means maintaining a continuous, highly controlled refrigerated environment so that temperature-sensitive goods stay perfectly fresh as they travel across thousands of miles of ocean. Finally, step 4 is the export infrastructure. The whole thing is a seamless end-to-end chain that moves way beyond primary agriculture to make sure global food delivery is reliable, efficient, and highly profitable, regardless of whatever external market shocks might pop up.
Section 4. Global Capital and Policy Shifts. Consolidation, Regulation, and Strategic Investment. Zooming out for a second, the themes of resilience, consolidation, and strategic capital that we just saw in agriculture are actually echoing across the entire global economy right now. Now, what's really interesting about this slide is how it brings together some seemingly totally disparate moves. At first glance, banking, global e-commerce, government policy, and professional sports might seem completely unconnected. But thematically, they are all intimately linked by a worldwide drive toward consolidation, much stricter government regulation, and the aggressive reallocation of capital into strategic, highly resilient assets. Everyone, everywhere is basically trying to build a moat around their business.
Take a second to just consider the sheer scale of this figure, 30.6 billion euros. That is the massive bid launched by Intesa Sanpaolo for Monte dei Paschi di Siena. It marks one of Europe's absolute largest banking consolidation moves of 2026. The connection here is fascinating. Just like we saw the agricultural supply chain integrating and bulking up to protect itself, the European financial sector is doing the exact same thing. In an era of unpredictable global shocks, banks are merging to build these massive, resilient economic fortresses that can weather literally any financial storm.
And at the exact same time, we're seeing a dramatic tightening of global rules. France recently hit the global e-commerce giant Shein with 22 million euros in new penalties. This fine was triggered by transparency and consumer protection violations around their environmental claims and pricing structures. This is a really crucial pivot in global regulatory pressure. It emphasizes the rising international scrutiny over compliance standards in these massive cross-border supply chains. Governments are simply no longer willing to let mega-corporations operate without strict oversight. Meanwhile, back in South Africa, domestic policy is actively shifting to support those larger economic ambitions we talked about earlier. The South African cabinet just approved a comprehensive new migration strategy, explicitly positioning migration management as a top national priority. So why does immigration policy matter for global trade? Because predictable, well-managed labor forces mean predictable output. A structured migration strategy secures labor markets and, crucially, boosts overall investor confidence. Foreign investors, like those Italian firms we discussed, need to know they're putting their capital into a stable, well-governed environment where their investments can safely thrive.
To wrap up this rapid-fire market update, it is fascinating to see exactly where billionaire capital is flowing for safety right now. Melinda French Gates has expanded her portfolio by acquiring a minority ownership stake in the NHL Seattle Kraken. This highlights how massive capital is aggressively seeking out fast-growing alternative asset classes. Professional sports franchises are incredibly scarce assets. There are only so many teams available, and they offer returns that don't always correlate with volatile stock markets. It's a perfect example of diversifying to find resilient growth outside of traditional avenues.
Section 5. The Future of Global Trade. Connecting the Dots.
We've looked at a multi-billion-dollar food processing deal between South Africa and Italy, European banking mega-mergers, regulatory crackdowns in global e-commerce, and high-profile sports asset investments. So the crucial point, connecting all of these, is summarized perfectly by this quote from our source material. Partnerships of this nature are becoming increasingly important drivers of agricultural industrialization and long-term economic growth. Whether you're looking at food systems, financial systems, or alternative assets, the overarching theme of 2026 is this rapid shift toward value-added resilience. In other words, it's no longer enough to just produce raw goods or hold loose cash. Success today means integrating resources, upgrading technology, and fundamentally building armor around your assets to protect against a rapidly changing world.
I want to leave you with this final, thought-provoking question to consider as you watch the markets this week. As supply chains consolidate and regulation tightens, where will the next wave of global capital flow? Keep a close eye on these macro trends because they are fundamentally reshaping the world we live in from the ground up. Thank you so much for joining me today to explore this material. Keep learning, keep questioning, and I'll see you on the next explainer.